Hey everyone, it's Nick Gerisilo here with the Gerisilo's Happy Home team, and I just want to share with you a few thoughts that I wrote down as far as what we can expect for 2012 and beyond for the Puget Sound and Seattle real estate market. Probably the biggest thing to focus on is what our supply and demand levels are currently looking like. The amazing thing, I was looking back through our statistics, and in December of 2011, we had about 4,600 homes come on the market, which maybe sounds like a big number, and that's for King, Snohomish, and Pierce County. But the fact is, that's the least amount of homes that have come on the market in 1 month in over 10 years. You have to go back into the 90s to find a time where we had that few of homes coming on the market. So there's very few saleable listings on the market right now. Another part of our inventory that's been constricted is new construction inventory. So last year, there was just under 2,000 lots that were recorded in the Puget Sound area. But if you look back historically, for instance, in 2005, we had over 14,000 new lots that were recorded. That's in just that 1 year versus 2,000 in 2011. And so what's happening is you have a lot of plats that have gone back to the banks. Big builders have bought them, developed them, and then foreclosed on them at the peak of the market. And then you have national builders like D.R. Horton, Pulte Homes, Toll Brothers coming in and buying up all these lots and building out homes. But in the meantime, no one's buying raw land for future development. So in 2-3 years, we're going to have a significant land shortage. There's not going to be a lot of new construction supply, and resale listings will pretty much be the only available inventory. So that's going to help a recovery in a few years out as far as price appreciation is concerned. But in the meantime, with our restricted supply of home sales and affordability being the best it's been in decades, we actually just last month had the highest rate of sales since July of 2007, before the whole market turn began. And that's really amazing, especially when you consider that January of last year, or of this year, we had a snowstorm, it was the middle of winter, versus years prior we had, tax credits in the middle of the spring market, April, May, June, those times of year, that had fewer sales than we did just last month. And so the thing that's driving that is interest rates being the lowest they've been in over 200 years. I mean, literally the lowest it's been since America's been a country. Last year they ended up around 3.9%. And the year before that, 2010, they were about 4.9%. So we're a full point lower than where they were just a year prior. In regards to price and appreciation, prices came down a little bit over 10% in King County last year. And that's mainly because you still have a large percentage of bank-owned and short sale properties. About 37% are distressed sales right now. So those will always kind of keep a cap on prices. And there's still a significant backlog of other foreclosed and short sale properties that the bank's still working through. Probably another at least a year and a half, 2 years of that continuing to be a significant portion of our saleable listings. But once those are gone, we're going to have we will have a very limited supply of new construction inventory, fewer bank-owned and short sale properties that are going to be competing on the marketplace. And I think that's really going to help bring the recovery as far as resale listings, people being able to sell their homes and move up to the next property. In the meantime, the market right now continues to be a phenomenal place for first-time buyers because they can own for less than rent. I mean, you can buy brand new homes for under $1,000 a month mortgage payments. Investors on nearly everything I'm looking at right now could cash flow $300-400 a month as a rental property. And we're also going to see a resurgence of move-up buyers here very soon as well, because you got a lot of people that have recently gone through bankruptcy and foreclosure filings. And when you do that, you're restricted from being able to qualify for a home loan for a couple years. So for instance, bankruptcies had peaked in 2010, and you have to wait 2 years from a bankruptcy to be able to qualify to buy a home loan. Well, if they peaked in 2010, that means they can now start buying again in 2012, and we'll start seeing those buyers enter the marketplace here very soon. Foreclosures filings actually peaked in 2009, and you have to wait 3 years from a foreclosure in order to be able to return and qualify for a home loan as well. So 3 years from 2009 puts us here again at 2012. So I think this year we'll start to continue to see a very high rate of sales, limited inventory, high number of people buying. Prices to stay probably pretty constant just because of all the bank-owned and short sales, and probably another year and a half, 2 years before we can start seeing healthy appreciation again. In the meantime, our local employment situation continues to be very strong. Seattle is leading the country in growth in the tech sector as far as job employment arenas, and technology is the is growing 4 times faster than any other source of employment right now, and we happen to be the highest growth of anywhere in the country. So our local economy is helping to move things along as well. So if you're a first-time buyer looking at getting a great deal on a home right now, maybe an investor trying to take advantage of some of the amazing affordability that there is, or if you own a home right now and are curious what your current market values would be, please feel free to give us a call at 206-372-0218, and you can also visit us online at happyhometeam.com. Thanks so much for tuning in, and take care.